Welcome to The Path to Exit, a podcast to help software and internet founders understand the process to raise capital or sell their business.
Hello and welcome, everyone. I'm Mike Lyon, founder at Vista Point Advisors, and this is The Path to Exit. This podcast is dedicated to helping founders of software and internet businesses understand what it takes to raise capital and sell their businesses and how to do it well. My guests today are Rader and Saber Kordestanchi, the co-founders of Hostaway, a leading vacation rental property management SaaS platform. Marcus and Saber built a fantastic business that scaled dramatically in a short period of time with very little capital raised. In this episode, we discussed the founding story behind Hostaway, how they responded to a rapidly changing market catalyzed by COVID, how the buyer universe changed over time, and how to think about the benefits of a competitive process. Please enjoy my discussion with Marcus and Saber. Guys, first of all, thanks for taking some time to be with us. I know you've been really busy since the transaction, but appreciate the time.
Thank you for having us.
Thank you.
Marcus, can you talk for a few minutes about your background before Hostaway, and specifically what positioned you to recognize the market opportunity in vacation rental SaaS and how you started Hostaway?
Absolutely. It's funny how the answer to that story, it keeps evolving and changing over the years. And at some point, I'm not even sure if I know why we started this in the first place. But yeah, before Hostaway, I was working in various startups, and I usually had a role where I was setting up a, let's say, site. Businesses uses the main assets, but creates a new market opportunity and explores that. So I was quite familiar with doing market research on different industries. And a personal hobby of mine is traveling in real estate. And I think Airbnb back in 2015, when I started looking into this market, they combined two aspects that were close to my heart. But what really got me excited was I started doing market research, and it turns out there were a ton of people who were serious about growing their business on renting out properties, but they were lacking the technology. And that's where, after talking to industry insiders, I realized that a lot of the industry insiders who have built technology companies, they actually had no idea how to build technology companies, because they were either hospitality experts or real estate experts. And that's when I saw the real opportunity that if we as technology experts can come in and build technology, here's an industry where there are no technology experts at all. That was really exciting for us. And that's why we started. And that's the path which is still on.
It's interesting. That's a pretty unique path. I think most of the founders I've worked with in my career, they've always kind of been in an industry, right? So they worked in a company that had some adjacencies to the industry. They recognized the problem, had kind of unique insight into it, and then created a product to solve that problem. Your story is a little bit more of loving an industry, but researching it and coming up with an idea, which I think is a lot harder, because sometimes when you're in a situation, you recognize the opportunity, right? And you go start it.
It can also be a lot easier. Like I said, the jobs that I had before this, they were all in new industries where I didn't know much, and my job was to find out. Or in some cases, they were in industries that I knew things about, but even the founders didn't know about an adjacent industry. I'll give a good example. There was one app that was teaching people how to play an instrument. But then they came up with a second business model, which was to connect music teachers with students. And those are two completely different industries. One is, very close to gaming, and the other one is very close to a marketplace. So those are different business models. They just happen to utilize the same assets and focused around an instrument. But one happens on a mobile app and one happens in person. So for me to research a new industry, that's what I enjoyed doing for 10 years before I started hosting.
That's a great skill to have, and obviously a big part of your success. Saber, over to you. Can you talk for a few minutes about your background before Hostaway? How did you meet Marcus and then decide to team up on this crazy idea of Hostaway?
Yeah, absolutely. So I started my first company when I was 17 or 18. It was a small company for consultancy and services. And I've always been a builder. And when I moved to Finland a few years ago, I was working together with Marcus at some other company, which was in ad tech. And that's how we met. At some point in 2015, Marcus contacted me and said, I have this great idea. And back from that company, I remember Marcus and his energy. So he managed to excite me to join Hostaway. His idea was great, but I'm a builder. I'm a person who executes, and that excited me. I had a massive energy in doing something big. I've been involved in a lot of small and medium-sized projects. but there was always an urge in me to do something massive. And I saw a great opportunity, a great match right from the beginning. And that's how I ended up joining Hostaway.
That's great. And you guys did just a fantastic job scaling rapidly and responding to this market opportunity that COVID presented. Although I'm sure in the first couple of months, it probably felt like it was the worst possible time to have a vacation SaaS platform up and running, given all the lockdowns. Can you talk about how you recognized the opportunity that COVID was ultimately going to present and then how you capitalized on it in such a short period of time?
Sure. I can maybe answer to that. There's a lot of different factors that played in, but I took a very risky gamble. I realized that we're probably not going to make it through this one. We lost 60% of our revenues. We also had no money, to be honest. We're about to raise a round of funding and didn't have any money. So we had to let people go. And the bet that I took on behalf of the company was my own mental health. So I decided to dedicate 3 months and talk to every single one of our customers, but in a certain order. I prioritized those that had just lost their business, their life savings, maybe lost everything they had. I spoke to those first. It was one of the hardest things I've ever done. And then gradually I started talking to those who were not doing well. They were maybe surviving. And eventually I spoke to all of our customers. When you do that enough, when you just talk to the customers, every single one of them, you start to see patterns. And especially if you're a founder, you see patterns that nobody else can see. I saw a pattern of positivity, of light at the end of the tunnel, of hope, especially in the Sun Belt in the United States, Florida, Texas, Louisiana, Carolinas, Georgia. And I told the team, look, this is the only place. I've spoken to people around the globe. Nobody sees light at the end of the tunnel except these people. We have got to do everything we can to enter and succeed in this market. And if we do that, we can then expand to other markets as well. And the requirements for those customers, we didn't have many of them, but they were very different from other customers. And so our product team, our marketing, our sales, we pretty much had to change everything in order to accommodate. But we were successful. It took us about 6 months to throw away everything that we had built and rebuild it from scratch. And we were able to do that. So we were able to monetize on that market. And it just turns out that changes that we made, for example, to the product, were very suitable for the broader market as well.
That's fantastic. And I love that when you don't have a lot to lose, right? It felt like maybe the end would be you risk a lot, gamble, and make a big decision. And it obviously paid off for you guys. You've already touched on this a little bit, but I thought it was one of the things we found most unique about your company is the ability of you and your team to kind of empathize with your customers. And you've already talked about a little bit where that came from, really to provide them with top-notch customer service. Can you talk about how this became a big advantage for the business, particularly because it's a pretty fragmented sector, right? There's a lot of alternatives to Hostaway out there. What did you learn during that time, and how did that allow you to grow in the bigger market later on?
First of all, me and Saber, neither one has operated a business at this scales. We have done a lot of jobs and positions that we've never done before. And that's very relatable to our customer base. It's a fragmented market, but when you start looking into the short-term rental and the vacation rental sector, what you will find is that a lot of the people who are successful there, this is their first company and they don't have extensive management experience. They haven't run big operations before. Some of them have never even hired people before, and neither had we. There's so many things we've had to learn, like the employment laws of Spain, which is something nobody told me in school. This is one of the things you need to learn if you ever want to have a successful company. But now I know everything about that. And that makes it really relatable when we teach our staff what it's like to be a customer of ours. Because most B2B companies, they cater to businesses that know what they're doing. A good example is if you're selling to a bank, it's not even legal to have a bank that has no clue what they're doing. But if you're selling to software companies, well, there's no regulations there. So software companies can have no clue what they're doing and they can still be successful. Same thing happens to be with vacation rental property managers. And it just resonates very much with us because we had to start from scratch and learn everything from them.
Totally true. Well, let's shift gears a little bit. If anyone's listened to our podcast before, you know how much VPA loves to make the process competitive. So my question to you guys is, after experiencing what was a highly competitive process, right? This process had a lot of competition. Everyone wanted to do your transaction given the business you built. How do you think about what makes a process competitive? and how that leads to more negotiating leverage and ultimately a better outcome, which is what all founders are after when they start this process to either raise capital or sell their company.
I think the first thing that really makes the process competitive is building a good business. I think that's what a lot of founders miss. They think there is some trick, there is some shortcut they can take, and this is what we learned the hard way. The first step is to building a good business. But after that, what can help to make the process competitive is to just partner with a good partner. In this case, it was VPA, Vista Point, and we took our time selecting our advisors. We talked with even more advisors to select an advisor, and it really helped. I think part of the competitive process is being able to select a good advisor and being able to trust them. So that's step one. The step two of making the process competitive for us has been to run really fast. This is something that I think a lot of the founders might get wrong, that since you are doing it once, probably raising such a big round or doing an exit to your business, you want to take time and do it the right way. But sometimes running as fast as possible is the right way. And this is something we didn't get in the beginning. We wanted to take our time and make sure every step is done perfectly. But at the end, just being able to run as fast as possible helped us with the competitive process.
That's great. Marcus, anything to add there?
I can maybe add there's one thing during the process that was really interesting to me. I started studying up on how these things work. I read a lot of books, listened to a lot of podcasts, and
now you're on one.
Yeah. And one of the most interesting aspects was that I learned so much. For example, I had no idea what the business model of a VC fund is. I mean, how does a VC fund make money? I thought they make money on investing in great companies that have an exit and then they get money. Turns out that's not at all the case. I learned so much that would have helped us earlier in the business just by reading up on what I should know in order to get a good transaction to go through. So if I have any advice to give, it's read up on the exit stuff somewhere around the 1 million ARR mark and don't wait for 10 or 15 million. You're going to lose a lot of potential if you don't know how things work.
Absolutely. And I think one of the things we run into during this process is obviously the process of raising capital or selling your business. It's pretty involved, and founders are good at a lot of things, right? That's what makes them a good founder. But sometimes there's things we do during the process that seem non-intuitive to a founder. Saber kind of mentioned the going fast, right? If you have a lot of leverage, you want to go fast. Is there anything else that came up that we did that seemed like it was against your instinct or maybe not what you thought should be done in a process, but ended up adding some value along the way?
I think it's ingrained in the mind of a founder to be always paranoid and always be the fighter and just take the punches. This is in our instinct, but the fact that VPA and the advisor that you take to help you with the transaction help you with a lot of these paranoia. They sit with you, they explain the process, they demystify every step of that is really helpful. And it's against our instinct as founders to not be paranoid every step of the way. But in this case, it's really not helpful.
That's great advice. Thanks, guys, for that. One thing that I always find interesting is how right before you start a process, you have this perception of some of the investors or the buyers, right? Either based on their marketing or maybe discussions you've had with them before you start a process. How did your views of the investor and buyers universe change over time? Obviously, you had a lot of interest, private equity standalone deals. There were obviously strategic buyers who were interested in buying the whole business. How did your view of those buckets of buyers change from before the process till after you really got to know all these buyers in the middle of the process?
Well, I could say it changed quite a lot. And I think in addition to the factors that Saber mentioned before to make a successful transaction, I think timing and also the place where you are is really important. I mean, obviously you need a good business and you need some investors who are interested. You need advisors, you need a process and so on. But at least what I learned was that we were in a space that there were way more people looking at the space than I had any idea. And just the investors, the materials they presented, the research that they had done gave me a clear indication that they were waiting for an opportunity like this. And of course, we know the space very well. We know that there's no other opportunities than us, but we didn't realize what a massive impact that would have on the possible outcome that we got. And that's something that I wish I would have known a bit earlier and had an understanding of. Something that really surprised me was just how sophisticated and how much money these investors had spent on investigating not only the industry, but specifically our company. Many of them, we had never heard of them before, yet they have spent hundreds of thousands on researching us, and they found out that they want to make an investment. That was really impressive for me to see.
To add to what Marcus said and to build on the previous question you asked, Mike, it is in our instinct as founders to be paranoid, and a lot of questions an investor or a buyer asks, we see it as a got you question. They are really not got you question. They are looking for our help to build a case for their IC. And our mindset changed somewhere in the middle of the process that we should give them more ammunition to build the case for their IC. Not only that, sometimes when there is a lot of focus on a specific metric, for example, if churn is high or if this specific metric is not going well, in fact, what they are looking is future opportunities that will help building the business and grow the business, and not got you question to put you on the spot or invalidate the value of the business that you have made. So along the way, our view of that changed, and it really helped us being able to see ourselves as the same side of the table with these investors rather than sitting in front of them at the other side of the table.
That's really a good point, that actually the process itself helped us vet the right investors. It's a bit like the dentist asks whether you brush your teeth and whether you floss. You get very defensive there. But when you work with the right type of people, suddenly you realize that we're actually on the same team. Well, not yet. We haven't signed. But we're working towards a goal where the outcome is that we're going to be on the same. So if we don't play ball now, we're not going to end up being on the same team, and we might end up playing the game with someone that we don't even like in the first place. Another important aspect is that the investors or buyers in a process like this, some of them have agendas, and some of them are hidden, and some of them are fully out and open. And I think we learned a lot about these agendas and angles that the investors came at, because they have a thesis, that's what they call it, which basically means that they're looking at us for one specific reason. And finding that out, do I want to spend the next 2 or 5 years of my life just based on someone else's thesis while I'm running my own company? Maybe that's not a good fit. But maybe their thesis is exactly what I believed in and what I have been believing in for decades. Well, in that case, it might be a better fit. But there's also investors that don't have a specific thesis, that are genuinely interested in the space. And that was interesting to see the different buckets that these investors fall under.
I think you guys bring up some very sophisticated points about dealing with investors. The problem that some founders face up front is some of them don't know there's almost an unlimited amount of capital out there. So it's really about who's the best fit for you, right? And the other thing is everyone in this business is pretty good at sales and marketing. So when you're in the process and you can put those investors or buyers under some stress, kind of their true personality and how they work with companies comes together. You can see that in how they negotiate in a process, right? Are they trying to solve the problem and win the deal, or are they trying to look for some leverage? So I think you learn a lot about people by putting them under stress. And in any company you're building, there's going to be stressful times. So it's good to get a preview of what that might look like. So I think that's great advice. Shifting back to the company specific points, obviously you guys have had a lot of success growing the business. Talk about a few things you learned while growing Hostaway, and what would you do differently?
Yeah, I touched upon the subject a bit earlier. We learned a lot. We learned everything about the landscape of our industry, and we learned that from scratch. We actually started renting out properties just to know what it's like to clean a toilet and change sheets between guests, and what to do when a guest loses a key during their stay. But one thing I wish I would have spent a bit more time on earlier on was figuring out how the whole ecosystem of technology and capital works together, how VCs work, what type of investors there are, what are different things that happen if you work with an angel investor. We dedicated 7 years of our lives to learning a completely new industry that was evolving and reinventing itself every year. I wish we would have taken some of that time and invested into figuring out what is a funding round? How does it work? What does it mean? That's maybe my number one lesson of what I would do differently.
So I would say what I would really change is investing time in own health and mental health, because for you to be able to be at your best in front of everybody, you should be taking care of yourself, right? So that's one thing I would really change if I was doing it again, and at the same time spending time on learning, because there are a lot of best practices that you can learn from. You don't need to reinvent the wheel all the time. So I think if I were to do it again, I'll take them into account.
I think that's an important point. Yeah, and a lesson you learn the hard way. Right?
Absolutely.
I think both of these advices are great, but they're all very hypothetical. I mean, we come here from a winner's bias. We played the game and we won. This is a game that most people lose. So as winners, it's very easy to come and say, I wish I did this one thing differently. But then if someone else goes and takes that advice, maybe that's exactly what prevents them from being winners in the first place. Maybe we had taken our own advice, we wouldn't be here.
That's true. It's possible. So Marcus, one question I have to ask about, you had a pretty elaborate deal announcement video. What was the inspiration for that?
So for those of you who haven't seen it, so go on YouTube and search for Better Call Hostaway. We planned the announcement very well because we wanted maximum publicity. One reason for that is that we are the youngest in our industry to be as big as we are. And as a result of that, there's many industry veterans that don't even know we exist, or they may have heard of our name, but they don't realize that we are one of the biggest companies in the space. And we wanted to make it clear to everyone. So we wanted the biggest possible publicity. Well, obviously, me as CEO, I need to do an announcement, ideally in a video format. And I looked at other companies, what they had done, and I noticed a trend. There's these middle-aged men getting slightly bald, and they're wearing a white shirt, sometimes a light blue shirt. They're standing in an office. I don't know why they're always standing next to a desk. And then they look incredibly tired, and they say, we have achieved this. And you see it in their eyes that actually, no, we didn't achieve anything. It was I who achieved it, but I can't say that on video. And I thought, okay, there's 1,000 of these videos here. I just can't. I actually recorded one. It's not live. I recorded, I think, 10 different editions. And then Saber, my co-founder, he looked at them and said, Marcus, we can't do this. We deserve better. So I remember this scene from one of the many TV shows that have inspired us here at Hostaway. It's called Better Call Saul. There's a scene where he needs to pick up 2 bags of cash, $7 million in cash, in a desert and drive back. Only he gets interrupted by highway robbers, or it's actually the cartel that stops him. And he has to carry these bags with nothing to drink for 3 days through the desert. And that's the scene that I think represents what we did in order to make Hostaway successful. So we reproduced the entire scene from Better Call Saul.
Great TV show and great scene, and a lot of parallels to building a company. No doubt about it. Well, last question to each of you, and you've already done some of this, but what's your best piece of advice for founders who really want to build a world-class SaaS business?
Oh, I can go on this because there is just not one good advice you can say. But what I will start with is, first of all, usually a lot of founders who have a good idea, they think all they need is a good idea. Usually if they're good at execution, they think all they need is an execution. But in reality, you need at least 5 things based on my experience. You need to build a great team. You need to have a great idea. You need to have a great strategy. You need to know how to execute well, and you need to time it well and have luck. And it's a function of and, not a function of or. So it makes it even harder. So you need to get all of them right at the same time. Just because it's hard, you're looking for, let's say, a playbook. You're saying others have done it, then there should be a playbook. And you are just copy pasting from a lot of books, a lot of podcasts, and you're saying, okay, but if I do this right, all the successful people have done it, so it should work, right? But in reality, it doesn't. What I found out, at least, was that there is no playbook. It's just pieces of papers from a book that you just take, and you only take pieces that work with your business. So there is no playbook that you buy from a library and you read it. If it was that easy, everybody would have built a billion-dollar company. It doesn't work that way. You just need to be able to make good decisions based on the pieces that you find out there. What I will add to that is what Marcus talked about earlier, and that is survivorship bias. All of us are conditioned to just look at successful businesses, successful people, and copy paste that and hope that it works. It's actually the opposite way. I would say it's really valuable to talk with failed entrepreneurs and learn about their mistakes and try not to repeat them. And probably lastly, I would say it's easy to get trapped into shiny object syndrome and get distracted from what actually needs to be done. Usually what absolutely needs to be done for a business is mundane. It is grueling. It is not that shiny, not that easy to do. And that actually distracts a lot of founders from being successful and from doing the grueling task that will make them successful at the end of the day.
So Saber thinks it's hard work. I'm going to give 3 pieces of advice here. First of all, I don't like a lot of the advice that is being given, especially if you go on Google and you search for content that is optimized to making startups successful. I think a lot of the advice can be either or. It works or actually it will kill you. So what I would recommend doing is just check your competitors and see what are they doing. What is the industry doing right now? For example, when we started, every single potential investor said, this is way too competitive. And that's if they even started researching. They could find 50 solutions out there that all did a better job than we did at what we did. And then if you spoke to those founders, they all said, this is a terrible industry because it's so competitive. There's so many solutions out there. Well, that's maybe the best reason ever to start a company. If it's so competitive and everyone's depressed because of how competitive it is. Well, if you just do a better job than everyone else, then you're going to get it. But my point is focus on the competition, not on some generic rules that only apply when the competition hasn't realized it. That being said, there's a lot of companies that spend way too many resources on trying to figure things out. When you run a SaaS business, you don't need to figure things out because you can follow the best practices. I would start with the key metrics of a company. You don't need to reinvent the wheel. You don't need to learn how to calculate customer acquisition cost because there's thousands of other companies out there that have already done it. So don't reinvent the wheel. Just follow the best practices. It will save a lot of time. And the third advice that I have, and one reason why I see that even companies that are seemingly successful, they can't really get it to the finish line. I call it the global mega trends. Basically, when you have an idea or you have a problem and a solution that your SaaS company is solving, please make sure you understand what is the big picture. 10 years from now, 20 years from now, is this area of the market going to be interesting? Because if you're in the beginning now and it's going to take you 20 years to build a solution, well, if it's focused around coal mining, I can tell you that in 20 years from now, there won't be a single investor who's going to put in 1 cent. And this is what we did right, because this wasn't the only industry that we were looking into, but we recognized these trends like globalization, remote work. Yes, in 2015, remote work was one of the main drivers. We foresaw a future where remote work will become way more important and prevalent than it was in 2015. And that's exactly what happened. But at the same time, investors also saw that. And that's one contributor to our success. And we did the analysis the opposite way. So first we looked at the big trends and then came up with a problem and then came up with a solution. But if you already have a problem and solution, just check, does it fit into what you believe the world is going to look like 10 or 20 years from now? Because if it doesn't, you're working against yourself and you've got a ticking clock. So you might have time to, let's say, reposition. Maybe the same idea can work in a different space or under different circumstances, but don't work against yourself.
Well, Marcus and Saber, thanks. That's fantastic advice. Appreciate you taking the time to join the Path to Exit and share all your insights and all the dramatic success you've had over the past several years. And really excited to see where this rocket ship ends up. I know you're super busy building the business after the transaction, but thanks again for joining the Path to Exit. I appreciate it.
Thank you.
Thank you very much. It's been a pleasure working with you.
Vista Point Advisors is a founder-focused investment bank that advises software and internet founders through M&A and capital raise transactions. We are a fully unconflicted investment bank who only works for founders on the sell side, so you know that we're always representing your best interests. Securities offered through Vista Point Advisors, member FINRA, SIPC. This has been provided for informational purposes only. It is not intended to address all circumstances that might arise. Testimonials from past clients may not be representative of the experience of other clients, and there is no guarantee of future performance or success. Clients are not compensated for their comments. If you have any questions about the process of selling your business or raising capital, reach out to a member of our team, or check out the For Founders section of our site by visiting forfounders.guide.